Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. We begin with the major Philippine business groups throwing their support for suspended Energy Regulatory Commission Chairperson Mona Lisa Dimalanta. In a joint statement, the Philippine Chamber of Commerce and Industry, the Philippine Exporters Confederation, and the Employers Confederation of the Philippines insist that the ERC has become more active in addressing issues in the industry under Dimalanta's leadership. The three groups warn that the suspension order from the Ombudsman could cause disruptions in the operations of the ERC, potentially affecting consumers, businesses, and producers alike. The business groups are calling for a swift and transparent resolution to restore the integrity of the ERC. The Ombudsman recently issued a 6-month preventive suspension on Dimalanta amid allegations that she permitted power distributor Meralco to source its supply from the spot market without the necessary approval. San Miguel Corporation, led by billionaire Ramon Ang, is set to take over the operations and maintenance of the Ninoy Aquino International Airport this week. Ang says that these are exciting times for San Miguel to lead the much-needed 124 billion peso rehabilitation and modernization of the country's main gateway. The major overhaul will begin with terminal reassignments and initial rehabilitation efforts. The upgrade aims to boost the airport's capacity by nearly 80% to 62 million passengers annually. With the upgrades, they also plan to increase runway efficiencies from 40 to 48 movements per hour. A key executive of billionaire Manny Villar's retail empire passes away. All-Home President and Chief Executive Officer Benjamarie Therese or Jing Serrano passed away on September 5th at the age of 63. She had led the home improvement company since 2019 and also served as the president of other subsidiaries under the All Value, the holding company for Villar's retail businesses. Elsewhere in Asia, China's inflation rate accelerates to its fastest pace in half a year. The consumer price index there rose by 0.6% year-on-year in August. This is faster than the 0.5% increase recorded in July, but still below market forecasts of 0.7%. The uptick was mainly due to higher food costs, which came on the back of weather disruptions. In Canada, convenience store chain Couche-Tard remains determined to acquire Japanese retail giant NAIA Holdings, even though its buyout offer was rejected. Couche-Tard says they'll consider selling off certain assets if necessary to secure regulatory approvals and to address all regulatory concerns in Japan. The company is confident that they can arrange financing for the $39 billion deal, which would be the largest all-cash offer for a firm since tech giant Elon Musk purchased Twitter in 2022. Couche-Tard is now calling on NAIA to engage in friendly discussions. NAIA had previously stated that the deal, which is not in the best interests of its shareholders, could face antitrust challenges in the United States. The second round of Google's showdown with the U.S. Justice Department has begun, this time over the search engine's lucrative advertising technology business. In its opening salvo in court, the Justice Department argues that Google seeks to dominate all sides of online advertising technology by controlling competitors and customers. The Justice Department claims that Google uses monopoly building tactics of eliminating competitors by acquiring its way to success. If it secures an unfavorable ruling, Google may be forced to sell at minimum Google Ad Manager, a platform that includes Google's publisher, ad server, and its ad exchange. Last month, the Justice Department secured a landmark ruling against Google over the tech company's alleged monopoly over online search. Tech giant Apple finally unveils its highly anticipated new products, including the artificial intelligence-boosted iPhone 16 lineup. The new iPhone 16 will feature the advanced A18 chip and a customizable button for camera controls. The iPhone 16 Pro and 16 Pro Max come equipped with an even faster chip and enhanced AI capabilities, including suggestions for optimizing photo shoots. Apple also introduced a new version of its smartwatch capable of detecting long-term health conditions such as sleep apnea. The latest AirPods Pro are designed with advanced health-focused features as well, including the ability to function as a hearing aid. Tech companies worldwide have been racing to incorporate AI into their products, and Apple hopes that these new features will drive consumer upgrades and help reverse a recent slump in sales. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. U.S. stocks closed sharply higher as investors hunt for bargains following their worst week of the year. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq surged more than 1% each. Technology shares among the hardest hit in the sell-off last week were the top performers, with chip giant Nvidia rising 3.5%. Consumers, banks, and industrial shares also recovered as investors shift their focus to the Federal Reserve's looming rate cut to boost the sluggish economy. Looking ahead, the market is awaiting the inflation report for August. A lower print would provide the Fed with more flexibility to support the labor market, rather than focusing on containing price increases.
September is typically a weak month. We have election coming up, so election years tend to be a little weak heading into the election. So we get past the election, Santa Claus is going to come, and I think we rally to close the year.
Trading at the Philippine Stock Exchange opened a few minutes ago. Let's take a look at the initial figures. Right now, we're seeing a sea of green. Everything is up. Now, the PSEi index is up by 0.5% to 7022. We're at the 7,000 level. Hopefully we can stay above it. All shares index up as well, up by 0.5% to 3797. The financials, industrial, holding firms, services, mining, oil, and property counters are all trading in the green, with the gains being led by the industrial and the property counters. Now, to help us make sense of these numbers, we have with us Japhet Tantiangco, a senior stock analyst at Philstocks Financial. Good morning, Japhet. Thanks for being here with us.
Good morning, Ms. Maiki. Thank you very much for inviting me.
Okay, Japhet, the market is driven by narratives, and there are a lot to contend with now.
Yep.
Right now, we are at 7022. You think we can stay above it? What are the narratives that are top of mind for investors?
Well, with respect to the local market, I believe there are two main things that investors are contending with. First, onshore, investors are still focused on what the BSP will be doing forward. But on that, I think investors are taking this more optimistically because the prospect is that the BSP will be continuing with its monetary policy easing, because we're seeing the positive signs that the BSP is really going to do it, because number one, our inflation figures have been favorable, both headline and core, which means that somehow inflation is already being taken under control. And at the same time, you do have the Federal Reserve, which is also expected to cut policy rates. Now, even before the Federal Reserve cuts policy rates, if you're going to look at the interest rate differentials on real terms, the BSP is still ahead. The real policy rate of the BSP is at around 5.7, whereas the Federal Reserve is at it's around 2.7, whereas the 2.7, whereas the Federal Reserve is around 2.2. There's this interest rate differential between the two, with the BSP ahead, and so it really gives there's still really room for the BSP to cut rates, and this is what.
And then the question is, how much room? CPI August inflation came in at 3.3%, down from the peak of a recent peak of 4.4% the month prior. How much elbow room does this give the BSP to cut rates? And do you think they'll be cutting rates aggressively with 50 bips, or will they be more conservative with 25 bips? And at 25 and at a half point cut, what does that say about the economy?
Well, with respect to the BSP, we have yet to look into how much they're going to cut rates. But what we can say for now is that the BSP still has a long way to go with respect to rate cutting. But for this year, our projection for this year, the BSP may cut policy rates by 25 basis points. So that's going to bring policy rates to 6% by the end of 2024. Now, the reason for that, as mentioned a while ago, inflation figures are favorable. And then you have this room that's being given by the Federal Reserve and its policy outlook. But why just 25 basis points? If you're going to look at other factors, let's say the local economy, it's still doing well. If you're going to look at the second quarter and the first half figures, it was able to meet the government's target. So the government is still, the local economy production-wise is still healthy. It's just that, inflation has really declined. That's why the BSP is to shift into a policy easing stance, but they're not going to do it aggressively. They're just going to do it in line with what's happening with the economy right now. Also, if they do it aggressively, it might send negative signals to the market, to investors.
Right.
Like, oh, it's a 50
different, it's a difficult balancing act.
Yep.
I mean, even in the US, the rate cut is expected. Now, is it going to be 25 bips or 50 bips? The narrative that comes with that is also something that the market and investors will really read into. So if you look at it on a black and white case, cut by 50 bips is great, but if it comes on the back of weakness in the US economy, it's another issue that needs to be contended with.
Yes. Well, with respect to the US, we're also expecting a rate cut from the Federal Reserve, at least in its September meeting. But we're also expecting a 25 basis points from the Federal Reserve. I mean, I really don't side with the idea, or I don't ascribe with the idea yet that the US economy is going to have a hard landing. It's more of like a slowdown in growth. Because, yes, if you're going to see the last labor figures, yes, it was below expectations, but still jobs were added, which means that the economy is still growing. But it so happens that, inflation in the US is becoming favorable. And just like with the BSP, the Fed has to shift to a policy easing stance. So they might go moving forward for policy easing. But again, so as not to give wrong signals to the market, they might just go with 25 basis points.
Signals are everything. As a fundamental analyst, Japhet, what are the indicators you're looking at onshore and offshore? The biggest ones?
Well, ultimately for now, it's interest rates, because interest rates really have a lot of impact on the market. I mean, it affects the market for us in three different ways: from an investor standpoint, from a corporate valuation standpoint, and finally from a macroeconomic standpoint. From an investor standpoint, of course, if interest rates decline, bonds become less favorable, and of course, investors are going to look for other financial instruments, one of which could be stocks. So if interest rates decline, it's positive for the local market from an investor standpoint. From a corporate valuation standpoint, if interest rates decline, borrowing rates decline, this gives more capacity for our companies to pursue expansion plans, which will, raise their valuation, assuming they get things right. At the same time, lower interest rates means lower interest expenses for companies, which would help in their bottom lines. And finally, from a macroeconomic standpoint, as we've been talking about a while ago, if you lower interest rates, macroeconomic prospects becomes better, and this in turn boosts investors' confidence towards the stock market.
Right now we're at 70.22. What do you think it's going to take to keep us above the 7,000 mark? I mean, we've broken past it several times, but staying above it has been the challenge for the PSE index. What would the ideal conditions be for the market to stay above the 7,000 mark?
Well, ultimately, it's appreciation of the fundamentals. I mean, the local market is still below. From our perspective, the market...
Right, that's another thing. Are we undervalued at 70.22?
Yes, from our perspective, the market is still undervalued. I mean, based on our computation of the fair value of the index member companies, the local market should be at around 8,200. So at this level, the local market is still undervalued. It's a good thing that we've went above 7,000, but as you've mentioned, another case is how we can keep our ground above it. And then I go back to what I said a while ago, that the market is narrative-based, so we need the right narratives. We really need to see that rate cut from the BSP push through, and as much as possible followed upon. And we also need to see, that rate cut from the Federal Reserve. I believe the reason why I went above 7,000 right now is because positive spillovers from Wall Street, which in turn was driven by expectations that the Fed is going to cut rates. So we really need to see more policy easing. And of course, it would add to the market if we don't see any more signs of weakening or signs of slowing down in the US economy. And of course, all other macroeconomic factors, we have to take note of that, our economic growth, how it's going.
Speaking of that, you've revised your projections for for the data points for the balance of the year. Can you walk us through your revised forecast for GDP, inflation, and the peso, and where you see the PSEi year end? Lots of numbers, but go.
See, let me try.
We'll start with GDP.
Okay, so with GDP, we did upwardly revise. If my memory serves me right, my midpoint projection was at 5.6.
5.7 to 6.1?
Before that was at around 5.4 to 5.8, but we revised it to 5.7 to 6.1. The upward revision is mainly because of the higher than expected performance in the first half. I mean, originally we weren't expecting GDP to hit 6%, but we were proven wrong, and we're happy with that the economy is growing strongly. And so we revised our projections. For GDP, we still expect labor market in the Philippines is tight. This is going to be supportive of the economy, particularly consumption amid higher incomes. And then, of course, you still have government spending, which is expected to be supportive. And then finally, investments could somehow receive a boost given the prospects of the given the monetary policy easing that has already been done and the prospects that that more will be done. For inflation, we also downwardly revised our projection from right now it's at 3.4 to 3.8%, and the reason for that is the below than expected inflation we've seen in the first half. We really thought that El Nino is going to be problematic for the economy, but it turns out that it was still contained. Despite El Nino, inflation was still contained, and right now we're seeing some easing of trade barriers that will solve the food supply, the food supply, at least in the short run. And demand side pressures are already under control as far as we can see. That's why we downwardly revise. For the peso, we also revised
just numbers because we're out of time, Japhet. Okay, just numbers. Peso and PSEi year end.
For the peso, we downwardly revised. If my memory serves me right, from around 54.50 to 55.50, it's now at 56.28 to 57.28. And then for the PSEi, it was retained. I give
69.99 to 76.65.
Yep. Given the ongoing narratives that we have right now.
All right. Thank you, Japhet.
You're very much welcome.
All right. Thanks to Japhet Tantiangco, senior stock analyst at Philstocks Financial. Now we're taking a quick breather. Basis Points will be right back. Welcome back to Basis Points. Let's check on the business headlines in the major news websites. On Business World Majority, 85% of the 185 chief executive officers in the Philippines surveyed by PwC or PricewaterhouseCoopers are confident that their organizations will see revenue growth in the next 12 months despite geopolitical uncertainties. The survey results show improved optimism compared to the 79% of 157 CEOs who felt confident about top-line growth last year. On the Philippine Star, the share of bad loans to local banks' total loan book grew at the fastest pace in over 2 years amid higher borrowing costs. The non-performing loan ratio of the Philippine banks rose to 3.59% in July, up from the revised 3.51% in the prior month. And on Inquirer, Asian Development Bank's president, Masatsugu Asakawa, has announced his intention to step down from his position effective February 23rd of 2025. Asakawa has been serving as ADB's president since January of 2020, succeeding Taihiko Nakao. Longtime Alexander McQueen designer Sarah Burton joins French luxury goods company Givenchy as its new creative director. She replaces Matthew Williams, who left the label in December. Givenchy owner LVMH says Burton will present her first collection for the fashion house in March. Burton was famously known for designing the Princess of Wales's wedding gown in 2011 during her stint at Alexander McQueen. Her appointment at Givenchy comes as the fashion industry grapples with a global downturn in spending by luxury shoppers. And that's it for Basis Points. I'm Maiki Oreta. Please stay tuned tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News channel, always on top.